Good morning, everyone. If you're new to the channel, welcome. If you see value in the daily broadcasts that I do, click like, subscribe, and leave a comment. I really like the comments. Monica R. Do I think NCTY will go to $200 this year? That is a tall order. Let's look at NCTY real quick. So you can see here, it popped up on some news back here in early January. Let's see if my news feed will go back to early January here. January. The 9 says signed investment term sheet with investors to start cryptocurrency business. Okay. So I don't know what, I haven't dug into the financials on the 9, but of course cryptocurrencies, I mean, they look like they are here to stay. Pursuant to term sheet, company will issue 8,108 100 Class A ordinary shares equivalent to 270,270 ADSS, American Deposit something or other. I forgot what that stands for. At basically 12 cents per share. So it looks like they issued some stock in order to expand operations. Their revenues and earnings aren't impressive. So on NCTY, things are bullish right now. I think here in the third quarter of 2021 and the fourth quarter of 2021, we're going to see a little bit of a pullback. Right now, the economy is experiencing an expansion, no doubt. Things are opening up. Commerce is being conducted again, and the economy is going under an expansion. I think that there's going to be a rather quick contraction toward the end of the year. A lot of people are really bullish about the second half of 2021. I think it's all about the rate of change. So right now there is a big rate of change in the economic data. And that rate of change is going to start to level off, and it'll probably continue. I think things will continue to grow, but the rate of change, the acceleration, will not be as fast. And so when that happens, you tend to get pullbacks in the market. I say the market, but there are a lot of sectors to the market. So we'll see things I think we'll see things even out a bit in the second half of 2021. I think there will be a lot of buying opportunities. And so I would keep an eye on NCTY over the next 6 months for buying opportunities. You can see here on the chart, on the bottom here on the daily, I had this run up here on the 7th of January to a high of $27.82. And then in this recent pullback here, recent sort of a little turbulence, there's been a correction. Correction isn't really like assets are overvalued. The correction is more like people are putting their money in different places, putting their money to work in different places. And so there's some turbulence there. That is going to happen again. And with a company like NCTY that is getting into sort of a new venture, I would be looking for an opportunity to get into this as it came back down again to this $27 range. I don't know that'll happen, but the thing about stock trading and investing is there are so many things to choose from that it's more profitable to be patient and wait for the performance because there's so many other great ideas to get into. So me personally, I don't think the NCTY within the next 6 to 9 months will get to $200 a share. That's just my opinion. But I do think this stock is obviously, Wall Street likes this. It's really, really quite obvious here. Let's look at the percentage run up from the end of December to what is that? The late February. This stock rose 2,411%. So there's something here, no doubt about it. It's just where do you pick your entry in this one? So this is a stock that I don't think I've ever traded, although I put levels on it here. There's probably an old Fibonacci in my, yeah, here we go. So I ran a Fibonacci from the top of the move in February to what is basically the top of the gap here on February 11th. You could call it the 12th or 11th. I just ran it to that one, and it's not an exact science. And I was looking for trades to trade a bounce, and not an investment entry. This was just a trade. So, if let's take that Fibonacci real quick and extend it all the way down to its previous big move there. And let me hide these horizontal rays here for a second. You can see here like 35.82, 24.52. Those would be levels where I'd be looking to get into the stock for the long-term investment play. If I'm looking for a move to 200, that's a tough momentum call to make. That's from a trading perspective, whether something's going to get to 200 or not, that's tough. From an investment perspective, that's tough too. It's not easy. It's just sort of like a matter of what price looks attractive and what percentage gain is going to be attractive to you for profit. Okay, so let's get on to the list today. I've got FSR is the top of the list on my large cap movers here. Now, FSR is a stock that I've traded a few times recently in these moves here. You can see on the daily. It's Fisker. It is a electric vehicle company. I don't know a lot about it. The only thing that I really know about it is it's based out in the western continental United States, and one of the owners, operators, officers of the company is a former Tesla employee that had some kind of a falling out at Tesla. And so today I have levels on it. Right now in the pre-market, it is at $25.55. And so, yesterday's action, I have levels on it. I don't have a high degree of confidence at $25.16. Today's a bullish day on the market. Stimulus was just signed. The 10-year here, let me pull the 10-year up real quick. The 10-year looks like it's going to start putting in a little consolidation area here after an impressive move up. And so if we can get now, and what spooked the market isn't really that rates went to 1.6 or 1.5 or whatever. It's the rate of change. You can see here it really accelerated here up to those levels. And so the market got spooked, and there was a correction in there because there were a lot of people saying, well, I better get my money out of long-term bonds and put it maybe just to cash, or get out of tech because rising yields, especially quickly rising yields, affects tech performance, or I would say tech valuations. But it's really a matter of where my money is going to grow fastest. So if my money isn't going to grow fastest under tech, but it will grow fastest in, say, for example, industrials or metals, not really, that's not a good example, consumer discretionary, so on and so on. Financials, definitely. So, we're with the yields kind of evening out here, Wall Street's going to like that. So we have some opportunities today, and where FSR, I have a feeling that FSR is going to launch after the bell. So the way I really want to play it is if it, instead of launching, just dumps, I'm looking for an entry at 23.71. If it bounces off of this 25.16 and continues to move up, I wouldn't be surprised. I don't have a high degree of confidence in that trade. Where I do have a high degree of confidence is if FSR decides to start just going through the roof here after it moves past this 26.46, tests it, and then moves up again. That is where I will start averaging in, and I will attempt to average in. If it breaks above, comes back close to testing it, but then starts to move away again, I'll start averaging into either where it tests or comes close, and then where it breaks the high it made on the break through 26.46. Okay, so that's the strategy on FSR. That's my strategy on FSR. FCEL. FCEL is a stock that I've traded a couple times as well. I have 2 entries on FCEL, and the degree of confidence that I have on my top number at 1581 is, I would say, 25%, and this is how I do the trade. So if I'm going to trade this and it hits 1581 and then comes back up above, I'll trade 100 shares. If it comes down, here, let me put it on the 10-minute. If it comes down to, this is a big range. If it comes down to 1259, I will be buying at least 300 shares. So, 100 shares here and 300 shares here represents a 25% position, and then a 75% share size allocation. So this is a big range, and I'll show you the Fibonacci that I placed on it. And the reason that I'm comfortable with the big range is there's so many things happening and there's so many ideas today on the market that I'll have the patience. I'll have other things to do. So if this thing starts to go off, if these levels start to get hit here and they go off, then I'll be here for it if it happens before, say, 10:30 or 11 o'clock. The Fibonacci that I put on it goes all the way from the top here at 29.44 on February 10th down to prior to its big run up at the beginning of November of 2020. So it's a big range. This is probably going to be a swing trade for me if I start to take a position in it. And I'm looking for an entry somewhere between 1581 and 1259. I don't know if I'll average into it. I don't know if I'll wait for another dip down to this level here. It's just these are just kind of my levels. This is basically how I'm approaching it. No exact number, not like in numbers recently on MP that I did in the past 3 days. Those were great entries. I didn't take all of the trades that were available to me that I'd planned out on MP. But if you follow the videos, you'll see on MP the numbers that I'd selected for MP were definitely great entries, and I had a high degree of confidence with them. This, I don't have as high a degree of confidence. It's on watch. I'll keep an eye on it, see what the price action looks like, and act accordingly and measure my risk accordingly. All right. BILI. Now, this is one that I had invested in. I saw, so BILI, let's go back on the daily here. There was a consolidation area right in here on BILI for about 6 months, right in here. And then it broke up to the upside, and it's had its run. All right, so now this is a tech stock. And generally speaking, I'm a little bit shy of tech right now because of the way it's behaved with the rise in interest rates. However, BILI is bouncing, and this could be the start of a bear flag right here. So what I would like to see it do, it's opening up high today. And so with this one, if it happens today, and it's pretty close to this range, to this Fibonacci retracement level right here, and I've taken it all the way back to from its high to where it broke out. Let me put it actually a little bit more. No, that's fine. Actually, I'll leave it the way it is. Anyway, it's close enough. If we get down here to 102.41, then I will be looking for an entry for just a trade, just a bounce, not an investment. Then if I get the trade, then I'll leave half or maybe 33%. It kind of depends of the trade to see if it can make it back up above this consolidation area. Right now, I don't know if this is going to be a dip, for another move up, or if this is going to be a bear flag for continuation to the downside. So that's just kind of how I'm watching it right now. And it's just a trade. It's not an investment. I was invested in this at about 120 a share. And I invested, where did I buy? Well, I've traded this thing a few times after it's run for small, for like 100 shares and so on and so on. I was in this thing for about 300 shares for a few weeks, and I think it was right in here where I started. Yeah, it was right in here where I started to average in around 117, and I caught this run up, and then I held on to the shares, and it hit up here to the high 150s, and it started to leak down, and then rates started doing their thing. And I think I let it go. I was in at an average of 120, and I let it go around 139, if I remember correctly. And so what it does next, I don't know. Does it go up? Does it go down? I don't know. I'm just trading it for right now and watching it. And if it can break above and hold this 115.45 level, start closing above it and start creeping back up again, I might think about buying long-term, buying this dip long-term. And actually, I shouldn't even say long-term. Swing trade it for somewhere between 3 to 6 months. Okay, now, NVFY, small cap momentum. They offer a mixed shelf, and I don't really understand this whole thing. They've offered a mixed shelf, $60 million mixed shelf, which means they're selling stock, bonds, warrants, blah, blah, blah. I don't see what's so attractive about that, because this company's really not profitable. Its revenues have taken a dump. I don't know, it was profitable. I mean, it did have revenues. When you get a small cap that's making $92 million in revenues and is able to skim $2.8 million in income, the margins are low here, and the margins were getting better. Revenue is up and down. Obviously, COVID apparently, or 2019 was a terrible year for it. Whenever you get a profitable small cap, you buy it. It's taken a real dump lately. I don't know what the whole story is, and I don't really care, actually. There's just too many stocks to get into. Now, if I had run across this back in 2017 or so, I would have definitely bought it. I don't know how well I would have done. I mean, looking back, it looks like garbage. So anyway, NVFY, it's a momentum play. It's not a momentum play I have a lot of confidence in. It's on watch. I've got a scanner here on Trade Ideas. I'll be watching it. One that I do like. Okay, so SIEB. Now, SIEB is a small cap financial. Now, financials might be taking a little bit of a dip here with the way rates are evening out. Financials like, rising rates. They're able to improve their margins when they can buy low, sell high, essentially. So this is one that they recently reported 10 cents profit on the quarter today, in fact, this morning. So whenever you get a small cap that's profitable, it's positive. It's good news. There's so many small caps that just don't make any money. They just lose money for a long time. All right, Entx. Now Entx, this is a company that filed a 6K, which is a foreign. Let's see, what's the terminology they use? A foreign issuer. So this is a foreign company. It's based out of Israel, I'm pretty sure, and they just basically filed a 6K as an update of their operations. I'm not really impressed with what I saw. It's a momentum play. It's small cap. Traders are going to trade it. Where this thing, where the entry is, it's the momentum strategy. So, the next 1 minute that breaks into a new high over the last 1 minute kind of thing. That's about it. And that's true with all three of these, regardless of the underlying fundamentals, whatever the profits margins and profit margins and revenues and earnings and so forth. All that really doesn't matter very much. It's all a matter of how it's trading. And so if it starts to trade according to momentum rules, then I will play it. What is the other thing that I wanted to cover this morning? Let's see. FSR. Okay, Roblox. So this is an interesting IPO. And I just watched a quick little summary on Roblox here. You can see it's 2 days old. It was listed yesterday, or it went IPO yesterday. Impressive range, opened at around 60, ran up here to 74. Now pre-market is at 76. Sometimes I'll play IPOs and sometimes I won't. So for example, with the I made a few $1,000s. This is a few months ago on Airbnb on the day that it opened here. You can see Airbnb on day one. I actually went negative. That's too bad. Airbnb. I mean, I use Airbnb every time I go on vacation. I use Airbnb. I love it. You can see here it opened at 145, went to as high as 164. Came down to as low as 140 and then closed at roughly 144. And so it's momentum. These things. When there's a new IPO, there are traders jumping on it. So today, with Roblox, I don't know. It'll hit the scanner. I'm sure. I'm sure it'll dip down. Its pre-market here is at 74. Post-market low is at 68. It's coming down quite a bit from its pre-market highs. Yep. It's coming down quite a bit from its pre-market highs here. You can see went as high as 92 per share. So volatility provides opportunity. Okay, everybody, that is the pre-market workup that I've done. Manage your risk. Good luck out there. I will see you at the recap. Again, click like, share, subscribe, and leave a comment. Love comments. All right, everybody, take care now.